trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, today's a big day in commodities, folks, because the largest futures contract that we have is the is the 20-year. I'm a little tired, folks. I had a live trading day today. I wish I had enough. Today, we'd had 8 in a row where we had winners, but today they tagged me. I was 0 for 4. I didn't get filled on the ones that counted. Just missed them by a hair, which would have made it profitable. They didn't get filled, so we only got the losses filled. But still enjoyed it very much. Looking forward to the 28th of June when we'll do another one. Here's what's important today, folks. This is the cash. Let's try it again. This is the 20-year note. You'll notice that we hit the 61% retracement right up in here. Now, we've already exceeded past this, but we did hit a perfect fib number right here, and we backed off. Looking at this from early this morning, you'll see there was your high right up in here, and we've been backing off ever since. This was one of our trades that we did. We did it in bonds. I'm going to go through it so you can see it and get a rough idea of what we're looking at here. So bear with me here 1 second, and we'll get up here. Hold on 1 second, and we'll get this here with the bonds. That will be right here. We'll do that with the 30-minute. You can see the bonds went. See, our original shot in bonds was on the hourly. Let me show you what happened here. Always look. See, we were watching for this very large ABCD forming right in here. That's this one right here. This over the last 3 days. We were watching it to get to this level right here. Just draw it in. I believe I did this right. Yep, I'm pretty sure. Yep, let's try it again. There's our ABCD. Shucks. Give me a second here. There's your A leg right here, B leg, C leg, D leg. We were trying to sell them at the 2102. You can see they only got to 2120. Okay, now that was considerably less than we had with the Treasury notes. If you notice here that we did go up, we completed the ABCD, which was at 2009. You see that? But we didn't make the 60. Oh, maybe we did. From this high back here, as I believe is what we were looking at, that big high right back there. Pushed it in right here. No, we missed it by just a little bit. Now, the Treasury notes made it, but this one didn't. So I assumed that was going to be negative. So on that assumption, we were looking at the smaller time frame, and here's what we were watching. See, there's what our original target was. I thought we missed that. So what I did was I sold the 382 right here. We used a 10-point stop. We got filled 11 points, so we lost 360 on that one. Just very, very quick. Now, the other one that we did that didn't last very long was in the live cattle, because as we take a look here, this is the August cattle that we were watching. And we'll get this up here and show it right here. Yeah, this was a really doozy here. This is what we were looking for. Here's what I was watching, was this ABCD pattern. This was such a quick loss, folks, that it didn't really, I think it was $100 or something like that. There was our number right here. There was the high of the day, so that was about 20 pips or about $100. I said, if it doesn't stop here, look out. And of course, it kept going higher and higher and higher. So that was one, didn't work. And then when we have another one here, hold on 1 second here. Oh, here was one we really had that was really interesting. Looked like it was going to be pretty good for a minute. And that was, we were trying to get crude oil down to this level right here to be a buyer. but unfortunately we didn't. So what we did was we sold it. Hold on a second, right here. We sold it on this retracement right here. Now you notice that it started out with about a $400 profit. So what we did is we moved our stop right above here, which was the right thing to do. So that was a very small loss. And the one that was the home run of home runs was a doggone gold trade. This was really a beauty. And you'll see here, this is what we were watching here. We were really trying to buy the gold here. Actually, our gold buy price was at 37, but what we did, you see the 382 came in here right at this level right here. Let me clean out these here so we can see it real quick. See, the 382 came in right there. So what we did is we tried to buy it below that low right here. And the reasoning why was we came within a half a dollar of buying it right there because that's our ABCD was right there, and boom, away it went. We happened to be looking at the AI program at that time, and you can see there was the bottom forming right here, and then, of course, it's still been going up ever since. We couldn't get the buy in here. This was the real sad part, is because we had our order here on this ABCD. See, it comes in right there. That's where our order was, just a tad. We missed it by 50 cents. And away it went. But that's the way it goes. Some days it's chicken salad, some days it's chicken poop. It depends on how you mix it. Anyway, that's what we're watching so far today. Market is moving higher. We have hold on one second, let's get this up here and correct this right here, tile vertical. Got too many things here that we're looking at, but we want to be watching them as we look. And we do have this is what I think is the most important one, even more important than the one on the two. Well, there's three or four. Let's just look at it. Here's our Dow Jones. Okay, now we've got an ABCD pattern forming here. Get this up here to see it. There's where it is. Right there is the ABCD, but there's the 382 on the long-term chart, folks. Okay, there it is right there. So that's where I would be selling. I mean, this is a big move down for 2 days. All this is in the Dow Jones is a little rally back. So that number comes in at 386.43. That means that, look at this, folks. The Dow Jones went all the way down 300, up 250, down 250. It's going to end up unchanged probably right at this level at 386.43. And I think that's where you'd be a seller. And that's what I'd be watching if I was you. If you're not interested, then that's okay too. But that's what I would certainly be watching. The next one that's very interesting because it is the one that's the big daddy rabbit that has been running everything for a very long time. Let me see if I can get this up correctly. I want to do the weekly on this because I've done this before. This is the one. Okay. Let's get it up here, right here, and you'll see. Okay, there's the big move right here. This measures to what? Now, the problem is, folks, they've switched over. Okay, they switched over from the September contract from the June. So the September is trading at 200 points. Let's see, 1, 2, 3, 200 points higher than the other one. Okay, so this is where the June is trading right here at 196.53. The high has been 196.57. This is a 1.618 of that move. And if you did this really closely and looked at it, you'll see that the 1.618 of the whole move right back here. Well, see, the problem is, folks, it's the rollover. But anyway, this is where it should go down. Let's take a break. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I just want to review what was happening today because we were trading early this morning. This is when we started trading, of course, and you'll notice that we had just made a early morning high. We were looking at this AB, and this is just a 4-minute chart, but there was our level right here to sell it at 28, and we got to 26.5. We didn't get filled, and then it came down, and we were looking at this A, B, C, D to the downside, and here again, you come down, you'll see there's your AB, there's your CD leg, and misses by 2 points on that one, and then we started up, and we finally, I'm just drawing this in right now because we're not doing the show, but this is what we would be doing had we been watching this, is we're looking at a big ABCD here now, not too far away. There's your AB leg. There's your CD leg. That comes in here at about 41, I believe. 37. We got a couple of smaller ones in here that you want to line up because there's your ABCD. Now that one is right there. So that would have been one in the area where you'd want to be looking to be a seller, and you got one right behind it too. My goodness, it's ABCD everywhere. These would have been filled, but unfortunately we're not on the air there. So that was the whole cluster of these up into this area right here, and that's why it's important. I've already showed you the NASDAQ 1.618 expansion. Unfortunately, I know what I can do. That doesn't work. This will work. Let's get this weekly up because this will tell you where we are. There it is. There we go. We're almost there right now. There's the 1.618 of that move. Going back to this level right here, the long-term weekly. Just draw this. Oh, you can't do that because it doesn't go back far enough because of the June. But that 1.618 comes in here right now. That number on the September June contract was 196.70, and the high has been 196.55 that we're trading at right now. So that's the 1.618 of that move right there. And we're up 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 9 weeks it's been this strong, folks. That's a pretty big move. We look at this on a little bit smaller time frame. You have another ABCD coming in. Well, it's already gone above that by a couple hundred points, so that's where we're standing right now. But we're very close on some of these. We're going to find out if, in fact, they are going to be correct or not, but we'll do one thing at a time. Our guest will be Mike Moore of Moore Analytics. Let's move that out of the way. I have to show you another one that was a really nice buy. We missed it by just a heartbeat, and it's been a big runner all morning. I was doing so many things, folks. I missed it. I mean, saw it coming. And the market, we tried to get filled. We just missed it missed this one by a heartbeat, and look at this. It has this huge run up to this area. I saw it here. Okay, then the market didn't quite get back to it. And then we had the big move. See, that was a $400 move that we missed on this, but that's the nature of trading, folks. That's pretty much what we're watching. The 15-minute chart, this was what we were looking for. It just didn't work, all right? Those are the main ones that we're looking at. I think we've made a new high now in the, yep, I think so. Yep, there's a NASDAQ, and I believe, no. The high here is at 19684. That's the high of that level right in here. So we should take that out because we're 9662 right now, so should be able to do that without damaging too much. All right, now we'll want to watch one other thing that was really good. I already covered the gold. Crude oil. Apple. Somebody asked me about Apple. They always do. I should just put it up automatically. And we'll try to do that next time. There's Apple. We should have hit that 1.618 expansion up here. I think we should have. Let's just take a quick look. We were looking at that yesterday. This is a weekly. That's why. Yeah, we did. I think we did, didn't we? No, we missed it by... how much did we miss it by? We missed it by $1.50 on that. Let's look at it intraday and see where we are. Oh, my gosh, it's actually down on the day. Never expected that. So there's Apple coming down. Not too much going on there, but that's the way it goes here. Okay, and then, of course, if you're going to look at Apple, you got to look at Tesla. I don't know. Everybody must own these stocks. Hold on a second here. See, Tesla starts with a T, and I understand Mr. Musk got his contract. Is that correct? And I still believe we're heading lower it's on the week. You said a big outside D week. It's down actually a little bit. Let's look at the intraday here. This is the daily. We're down again today. I think this is where we're going, folks, is down here with Tesla. There's your X. A, B, C, D is coming down. I believe this is the number. It was around 160, as I recall, on the daily from that level. So that's pretty much what I think it's going to go to. We're at 179 now. Whether that's a big, a big deal or not, I don't know, but we will find out eventually. Okay, let's move that out of the way here and get it out of the way. And we've got that one. Don't need to see that one anymore. And the last one we want to look at was silver. And one question about the silver. Silver held up at a pretty important level, folks. Let's get this. This is where we are in the weekly. Let's go down to the daily so we can see what's going on. Okay, so we tried to get to the 382 here. We thought we were going to make it, but we didn't. We didn't even take out the previous day's low in here. So this is silver right now. Look at this, folks. This is not a bearish pattern. We've got double ABCDs coming in here. We got one ABCD pattern coming in. Right there goes quite a bit below it. And then we got the secondary one, ABCD, that goes exactly to it right here. That was yesterday's low, 28.45. We're now $1 an ounce higher. Looking at this on the hourly, it was real easy to see this one. See, we make this lower low by just a tiny bit. And look what's happened right up in this area right here. Look at that number was a 1.618 expansion. And there's why it's been having a good run. looking at it over just the last couple of days, there's the big run-up. And on a big run-up, you want to buy the first 382 retracement. This one is 50%, I believe. Yep. There's your 382. There's your 50%. Off to the races. Looks like we're going to have some more on the upside here, at least for a little bit, taking silver up into this level here, about the 129, up about at least another 50 cents. And at that point, you're going to have a pretty substantial, we have to figure out what that 382 is on that one, because clean that all out real quick. 29.40. And let's see if the 382 comes in at that point, because that's what we hit here. 29.80. So that's this pattern right here. Let's see how close it is to 29.80. AB equals CD. Bada bing, bada boom. 28.80. That's off by a little bit. So looking at 28.85 as the number. That's another 50 cents higher in the silver. So we're going to take a break now. When we come back, we're going to talk with Mike Moore of Moore Analytics. Stay tuned, boys and girls.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
We're back, folks, with Mike Moore of Moore Analytics. Mike, how you doing today, buddy?
Good, Larry. How about yourself? Thanks for having me on.
Oh, it's my pleasure. Let's start out with the crude oil complex, maybe starting with crude oil and Brent.
Okay, sounds good. Can you see my screen?
Yes, sir. You're coming in nice and clear.
Okay. So starting off with the crude oil, we've been rallying for the past number of days into a bullish correction down against the move down from the April highs. And then I said the break above 76.06 has brought in $3.26 of strength so far. You can see here I said we warned that we're in the bullish correction against the highs. There are areas of possible exhaustion to contend with above at 79.32 to 77, 80.28 to 94, and 83.24. But we are currently holding the lower of these. But one of these is not poised to hold more than temporarily for another week from now. Mm-hmm. And then decent trend penetration above 78.90 minus 0.5 of a tick per hour, which actually is going to come in at 78.87 as of 1 o'clock. We'll project this upward another $1.60 minimum, $7.50 plus maximum. And as you may recall from the last show, I believe, even though we got long the bullish year of the crude on the break of this day on 610, the heating oil was actually the one that first broke out to the upside on 6.6 a number of days beforehand when we took out these lines right here. I think we were on the last show when I was talking about that.
I remember that.
What's that?
I remember that.
Right, and that just goes to show you the importance of paying attention to what the RBOB and the heat are doing, because the heat was the one that tipped its hat to the upside that suggested that the complex was going to turn around. And you can also see that from this formation here upward, could have made $8,800 per contract, whereas the crude oil didn't even tip its hat till a number of days later. But even if you got long the crude in there around a similar time frame, it only would have made about $4,000 a contract. So there's a big difference, and there's a huge advantage in understanding what the heating oil and the RBOB are doing, because they are leading the direction of the crude oil 85 to 90% of the time.
That's...
Okay, you want me to jump back over to the unleaded gas, or do you want to look at
let's do the unleaded gas, and then we'll do the just keep going with what you're about to see, Brent, too.
Okay. So the straight skinny with all these is basically the crude, the Brent, the RBOB, and the heat, and the gas oil have all been making a bullish correction against the move down from the April highs. The one exception here is the RBOB now had broken below a bearish formation right here. Although it wasn't a major formation and we got basically what we were looking for, we've traveled back up underneath it, and we have not taken out these formations up above. So this is still actually bearish right here, even though we're trading higher than yesterday, if that makes sense. If we take out this formation, what's that?
It does make sense, yes.
If we take out this formation right here, which is going to come in at 243.73, minus 3 per hour starting at 1 o'clock p.m. Eastern Standard Time, that is going to project this upward 8 cents minimum, 19.5 cents plus maximum. And that would be a fade too. If we broke above there decently and back down through it decently, that would be a good selling opportunity. But right now we're bearish unless we break back above that decently. And decent is a specific number that I give out in my analysis.
Okay.
The heating oil, that's really the one that led the charge to the upside. A really nice steady move up here against the move down from the April highs. I warned of possible exhaustion here, but we took that out. The next level of exhaustion up in here is 254.90. Actually, no, scrap those. Those are done with. Next level of exhaustion up here is at 257.60, and then another level up here at 266.28. However, the heating oil just turned bearish right now, actually. So we had broken above this formation that was bullish. We saw a nice run out of it. We broke above this formation today, which had significant rejections to the upside, but we did not see those, and we just failed back down through here. So right now, I'd be out of all my longs in the heat. I'd be short, and I'd be looking for this to come off for a number of days probably. There's a decent possibility we might travel down towards these lows. I don't think necessarily that we take them out. We might see a big pullback down in here and then another run up for some of these levels. We'll have to see. But right here, we're bearish with a decent stop back above this line, and that line's going to come in at 250.38 minus 0.3 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. So you get two things right here. So you get we were in this bullish correction. We still have some time for this bullish correction, time-wise, for it to really hold on one of these exhaustion levels, and we had a steady run up into it. So what these are saying, the RBOB and the heat, or what they're both saying is we may see a smackdown for a few days within this bullish correction to then have another leg up and reach up for higher levels. Does that make sense?
Yeah, it does.
I'm not saying that to you, Larry. I'm just saying if anybody has any questions and I need to clarify it, I'll be happy to.
No, you're very clear. You're very clear.
Okay. RBOB, kind of a different situation here. We had broken above this formation right in here. That brought in some strength. That was the break above 81.13. We saw $2.21 of strength above there. If we take out this formation right above, that's going to come in at 82.96 minus 0.8 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. A decent break above there will project this upward $1.30 minimum, $7.50 plus maximum. If we were to break above there decently and back down through it decently, I'd be out of all longs and short and looking for this to come back off. If we take out this line below decently, that's also going to warrant a decent pressure. That's going to come in at 81.37 plus 0.3 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. By the way, to your viewers, when I say decent, it's just a terminology for a specific number. So when I say a decent break above a line, that's a specific number that I send out to my clients every day. If I say get long on a decent penetration and look for decent strength, the decent strength is not the same as the number of the penetration. It's a larger movement that would be commensurate with that kind of a risk. So you would be looking for multiples of a day's range. Mm-hmm. Okay, and then the gas oil finally.
We've got to take a break here, Mike. We've got to pay some bills, okay?
Yep.
Oh, wait, Mike, we got another 30 seconds. I'm sorry. Keep going. Yeah. We got 30 seconds. No, I was right. It's time to go. I'll be right back with Mike. More analytics, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, and we're talking with Mike Moore of Moore Analytics. Please continue, Michael.
Okay. Can you see my screen?
Yes, sir. Coming through great.
Okay, so the gas oil had broken above this formation. I don't remember whether we were on the show last time or not, but I said that if we broke above here that we would probably travel up to this formation, which we have over the past number of days. Took this formation out, which has large projections to the upside. That projects us upward $68. But, and this is how looking at the other things can help you. Right now, we pulled right back to the line. We already know that the heating oil broke below its similar line, so there's a good likelihood that this is going to break below its line also and see this wash out for a couple days. I just wanted to point one other thing out to you, too. We talked about the DC spread, I think, on one of the shows before. And as you recall before, I said that the heating oil was the one that gave you the first indication that the markets were going to rally because it broke out on 6-6. But actually, the DC spread, which I said can often be a harbinger of what you're going to see in the outrights, this actually gave us an earlier indication right here on 6-5, one day prior to the heating oil, as it broke back above this line and then started to travel higher.
Mike,
yep.
When you say DC, you mean DC 24 to DC 25?
Yes. Because it's a full curve of the crude for 12 months.
That would tell you whether there's strong demand coming in at that time. Is that what that spread's telling you?
Yes, sir.
Okay. You don't have to use sir.
Okay.
You can say your majesty, but not sir.
I've been down in Tennessee long enough, I guess.
Go ahead, buddy.
Just one other point here, too. I'm not going to show all the cracks of the spreads, but the heating oil crack down in here suggested to get bearish, and that also is on the so you got bullish on 6-6, and you can see here from that getting bullish, that made a difference of $4,000 over the ensuing 5 days per lot. So basically, what that's saying to you is, as a trader, if you're trying to make a decision as to whether or not you should be long the crude or maybe one of these products, understanding what these spreads are doing can make a huge difference in your profitability during the year. Just as an example, over these past few days, making far more being long the heat than you would have been long the crude oil. Do you want to jump in?
We've got Jeff from New Jersey's on the line, has a question for you. Go ahead, Jeff.
Yes. Hi, Larry. Thank you. Hi, Mike.
Hi, Jeff.
This is regarding where you said that RBOB and heating oil price action precedes crude oil price action. I'm pretty sure you're just talking about the daily chart. My question is, does that also work on shorter time frames, like 4 hour, 1 hour, 15 minute?
Yes, I mean, in general, since the heating oil and the unleaded gasoline are the products of crude oil, the demand for those products is driving the demand for crude oil in general most of the time. The only time you're really going to see crude oil lead to price action is if you got a war over in the Middle East or there's an interruption in one of the plants and stuff like that. So,
Right.
I mean,
what time frames does that work?
Well, I mean, it works on all time frames. Obviously, I mean, if the heat is leading the crude, it should be leading in general. Although in my analysis, if you, I don't normally show this to you guys, but to my clients, I send this sheet out every morning, and up at the top of this, right here, I have a weighting each day. See, it has a positive for the heating oil, an equal for the RBOB, and a negative for the crude. So that meant that coming into today, your heat should have been the strongest out of the three, and the crude been the weakest out of the three relative to one another. And let me just take a look here. Your heat right now is only up 16 and your crude's up 23, so that's a little bit inverted, but the heat did run up to 254.45 before that came off, and that was a far cry from where the crude ran up to. And you can just see in the past number of days that heat crack. You can see that difference right there. The heat crack is the spread between the heat and the crude. So this is basically saying that as the market was rallying, the heat was rallying much more stronger than the crude. Does that make sense?
Yeah, I'm not really hearing you say anything about shorter time frames, though. Like, in other words, if I wanted to use this phenomenon, like if I saw heating oil was below crude on a 15-minute chart, and then heating oil went above crude in a 15-minte chart, would it make sense to buy, go long on crude for a short-term frame, short-term trade? Sorry.
I see what you're saying. Why don't you give me a call separately? So I want to be able to answer your question more adequately than doing a quick answer over over the show. But feel free to give me a call. And I'll be happy to. You can get my numbers right there. So.
Well, that's great. Thank you, Mike. I appreciate it very much. Thanks. Take care.
You got it.
Yeah, thanks for calling in, Jeff. Okay. I think what he was trying to say is, Mike, I think what he was trying to say is, shouldn't you buy the weakest, buy the strongest if the three go up? Isn't that what he's trying to say?
Yes.
Yeah.
Don't get into the suckers thinking that says, well, let me buy the laggard because it needs to catch up. That is not the way you want to go about this, because it's basically, that lead horse is really what's leading the momentum.
Yeah, okay. Okay, that's pretty good. All right, I think we're ready to go here. Keep going, Mike. We got some more to cover here.
Yep. Want to take a look at the natural gas or the S&P?
Let's do natural gas because the S&P has more gas than natural gas, so let's just talk with natural gas first.
Okay, so natural gas, we have been in a classic bull structure, and I said that was poised to end with exhaustion rate up here at 315.90. We actually held it exactly with the 315.90 high. And I said I warned a possible exhaustion 315.90 to 610. We held that with 315.90 high, rolled over 261 ticks. And I said that the minimum target on the downside was 290.30. We took that out, and we're now trading 288.10. Areas of possible corrective exhaustion come in at 283.80 to 283.60, 276.30 to 276.35, and 265.50. We also entered into the ideal time frame for one of these to hold more than temporarily. What do I mean by that? If this is only going to be a bearish correction and one of these are going to hold more than temporarily, this is the ideal time frame for it to do it, and then we could start a possible whole new bull structure similar to this to the upside. So we're approaching one of these levels right now, and then the next level down below. So these two levels would probably be the most ideal levels. The last one down here would not be as ideal. Is that clear?
That's good. Yeah, let's go on with the stop
with
and
the
tea.
S&P? Okay, the S&P has been, obviously been bullish in here for quite some time. Just as an overall basis, since I've been doing the show, you know that I've been bullish in general since 3502, and we've seen 1,952.5 handles from that. I'm not going to go over all the rest of this stuff. And then I said that I cautioned of exhaustion up here, which we just held.
Okay, we got to pay a few bills. We'll be right back with Mike Moore of More Analytics. Stay with us, Mike.
Yep.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back with Mike Moore of More Analytics. Mike, tell the folks how they could reach you, please.
Yep. They can read. You can see. Can you read this right here?
Yes, sir.
So website is More Analytics, which is spelled MOOR analytics.com. There's no E after more. Or you can email me at moreanalysis@gmail.com. Or you can give me a call. I don't put my phone number out there that often, but if you want to give me a call, feel free.
Okay, that sounds pretty good. Listen, we're going to have you on again soon, so thanks for this great information, buddy, and have a safe weekend and a wonderful 4th of July. We'll have you on right after the holiday, okay?
Thank you very much, Larry. I appreciate it. Everybody have a good Father's Day out there.
You bet. We appreciate you. Father's Day's tough for me, pal, because I get 50, 60 calls from all over the world that people think that I'm their father, and it's not true. I used to joke. I did that as a joke with my kids, and to this day they're still. How many calls you get today, Dad? You know, I always make up a joke, but they thought it was funny at the time. Not so much now. Hey, thanks for joining us, buddy. I really appreciate it. It's Mike Moore of More Analytics, folks.
My pleasure.
And we'll see you folks on the flip side next week. We're going to have as our guest, I'm hoping for Peter Leides again, and also for Joe DiNapoli, but Joe's pretty busy these days, and we'll try to get Shane on. We haven't had him on for about a week or so we'll try to have him on. So that's pretty much what we're looking at today, folks. So live every day in an attitude of gratitude, and may God bless.